New Zealand has a problem with an ageing population, and I don't want that to sound like old people are a problem or a burden, because they are not. They have clearly worked their whole lives to get to the age that they are. But it is a structural problem for the economy, and the Reserve Bank is looking at how this might flatline the economy. Options for fixes, including lowering interest rates and printing cash. Shamabeel Jacob is with us this morning, Simplicity Chief Economist. Shamabeel, good morning.
Good morning.
Good to see you.
Likewise.
So what exactly is the Reserve Bank trying to do here?
Well, what they're saying is that because the structure of New Zealand's population is changing, how we do public policy is going to change. That's because we're going to have more people who are saving, fewer people who are borrowing, so the way we used to change interest rates is going to affect the economy differently. So they're going to be less powerful in many ways. But so is the government, because the government will be spending more of its money on healthcare and superannuation. Those things are fixed. So it won't have a lot of extra capacity to be able to prop up the economy when things are bad. So what it means is that as the economy gradually shifts, we're going to have to think really hard how those two big levers of economic policy, monetary policy and fiscal policy changes.
So what are the options instead?
Well, the options are, it's quite perverse. So if you think about it right now, what we do is when the economy is strong, we raise interest rates because we punish borrowers. And that makes it slower, right? It slows the economy down. But when you've got lots of borrowers, lots of savers, when you raise interest rates, it's actually good, right? You're going to have more income.
And they'll spend more.
They'll spend more. So it becomes very perverse in the way that we currently do public policy. It doesn't change, doesn't work anymore. And so what we're going to have to think about is, are there other things we need to do? Like, do we need to be much more direct in propping up how we lend money, how banks behave, whether we need to do more in terms of how people invest their money? So it changes everything from where we are today, because everything at the moment is designed around how can we influence the working age population, who are the biggest part of the economy. But as the balance of money shifts towards older people and savers, we have to think about how do we do policy differently. So it's a gradual shift. We've got plenty of time to kind of consider this.
Is there a tipping point?
Well, demographics doesn't work like that. But to give you a little bit of context, 50 years ago, there used to be 8 working age people per retiree. Today, there are 4. In 50 years' time, there will be 2. So the structure of New Zealand is changing quite rapidly, but over those kind of 50-year timeframes. So it's not so much as a tipping point, it's more that what happens is that gradually, and we've already seen this, monetary policy is becoming less effective. So interest rates on average are lower than they would otherwise be. But because we've got a big pool of savers and a big pool of borrowers, it's kind of in balance. But when that shifts, when you've got more savers, it becomes harder for the Reserve Bank to use the same tools in the same ways of acting to manage the economy.
So have they actually got any solid ideas of what to do?
Look, I mean, I think what they're saying is that because interest rates are going to be less effective, because you're going to have the weight of savers offsetting the borrowers, they're thinking that they might have to be more direct in terms of printing money, or to direct where the money is lent by banks, to be able to move up and down the economy by directing the flow of money rather than just the price of money. Now, that's quite unorthodox in terms of how we have done things. So it's quite a big shift. It's a philosophical shift, it's a policy shift, and these are things that we have to consider very carefully. Because what we don't want is these weird situations where we just ramp up the housing market yet again because that's the only tool we've got, right?
And you can't rein in inflation either.
And you become less powerful, and that's the problem, right? And I think that's the thing that they're trying to grapple with, is how can we still be relevant and useful to manage the economy? And what they're saying is that because of the demographic shift, it's going to be harder to do it in the way they're doing it today. And it's quite simple at the moment. Interest rates go up, interest rates go down. But in the future, it will have to be interest rates go up and we change how much banks have to hold in terms of capital, where they can lend money, what sector. So it becomes much more of a micromanaged economy, which is quite different.
Yeah.
And I think ideologically it'll be very hard for a lot of people to kind of get on board with that. But it might be necessary because of the changing demographics.
Especially if they don't like the Reserve Bank governor.
Well, and it's going to happen, right?
Yeah.
And because it's going to be an incredibly powerful position. It already is.
And way more political, because at the moment it's not, well, in theory, you know.
Well, it's relatively independent.
Yeah.
And I think that relative independence gives it a lot of credibility and a lot of ability to kind of do unpopular things, right? It's actually crushing the economy is not a popular thing, but we deal with it because it's relatively independent. But it's easy because it's one tool, right? It's quite transparent. We are raising interest rates, we are reducing raising interest rates. When it becomes much more micromanaged, I think we're going to have to think very carefully about how we manage those processes. I think that independence of central banks will become much harder to maintain unless we start working on it now. And that's what's really good the Reserve Bank is thinking about this stuff, because whether it's around fiscal policy or tax policy or monetary policy, demographic changes will have a really big effect.
Yeah, interesting. Great to see you, Shamu. Thanks for coming on the program this morning. It is Shamabil Yacob, who's Simplicity's chief economist.